Hello, everyone. Welcome to our webinar series with Brock Falconer from Illinois Mutual. Brock is the disability specialist for the Western region. He covers a few states out there in the West. And today he's going to talk about the presentation about the business owners and kind of the fundamentals of applying that to disability. So without further ado, Brock, take it away.
Thank you, Oscar. Really appreciate it and really appreciate you guys' time today. Today I'm really excited, even more than usual, and I am somewhat of an upbeat person, so take that non-lightly. We're going to talk about business owners. And as far as income protection and disability insurance market space, business owners are really the fastest growing space, as well as I think the best hand-in-glove fit for having this disability insurance conversation. And I'm sure there's some relatability and connectivity to your proprietary markets when it comes to business owners as well. So looking forward to finding and pointing out ways that this can correlate to those markets. So let's get started. And again, I appreciate you guys' time today. At the end of the day, we need to just concede, right, that there's unique needs for business owners versus a W-2 employee. Not that in any way, shape, or form there's more necessity to work with business owners than anyone else. But again, we need to take a little bit of a different outlook when working with business owners, because at the end of the day, they are going to understand and be able to probably relate to you verbatim the first 4 to 10 pages of each new year's tax law, right? There's a reason and there's something behind why they are self-employed and going through arguably one of the most arduous day-to-day processes in being self-employed. So at the end of the day, what role does their business play in their lives now? And what role does it play in the future, right? Is this a succession plan scenario where younger folks are going to take over via kids, family, so on and so forth? Is this going to be a retirement plan? What is really kind of the behind-the-scenes motivation for, them being a small to medium-sized business owner, which is really what we'll focus on today. How many employees or family members rely on them and their business? Do they have a succession plan? Is this something, again, that's part of their motivation? Would the business suffer if they could not work? Which I think is maybe one of the most key questions to ask, because I think sometimes there's a little bit of a disconnect between what actually would happen if they weren't able to work, because again, they're not thinking of that as even being an option, right? What fixed expenses need to be paid to keep the business open? What are we looking at for rent, utilities, so on and so forth? What again, fixed expenses are they working with? And again, this is part of our conversation with business owners in the disability market space as well, because of the fact that their gross income is not what we look at to cover for paycheck protection or regular income protection, right? We need to look at what they actually report, which is going to be much lower than what they gross. And the reason for that, again, are these fixed expenses they pay for on a monthly basis that, again, come out pre-tax and, again, lower their tax expense, so on and so forth. Is there a salary continuation plan in place? Now, ultimately, depending on the structure of the business, a lot of business owners kind of have the false assumption that they can continue to pay themselves should they not be able to work. You actually, in a lot of scenarios, need to set up a formal, on paper, documented salary continuation plan to be able to, again, make sure you can keep paying yourself without doing what unfortunately the IRS and government says is illegal, which again is paying you if you're not able to work. Obviously, a salary continuation plan is something on paper, much like a buy-sell agreement. Well, that piece of paper then needs to have some kind of insurance policy to provide the bank account for that, right? That's why we do disability buyout or life buyout to cover buy-sell agreements. For a salary continuation plan, didn't think that was a tongue twister. Apparently it is. Disability insurance is obviously what we'd use to fund that regular income protection. So again, let's get back to that idea, right? Can this business function, or what would happen to the business if you're not able to work? Sometimes, and potentially even often, you're going to hear, well, I think this business is somewhat self-functioning. Okay, Mr. or Mrs. Business Owner, just a couple questions for you then. When was your last vacation of more than a couple weeks where you literally were completely separate from any functioning in the business? And how good are you at golf? Right? So the idea is, have you even tested the notion that your business is essentially self-functioning and does not technically need you on a constant basis to stay afloat? And the way to test that, of course, would be if you've ever taken a long vacation and, again, kind of put the tools and the emotional connectivity to the business down for a few weeks. And most business owners wouldn't have done that, right? Their vacation is more of maybe a 3-day weekend every now and then. So again, maybe they're a little bit off in thinking that this is a self-sustaining business. How good are you with golf? You really love the sport, and again, golf can be replaced by anything you want to, right? But again, the idea being, if you had all this free time and did not have to be so hands-on at the business, then you probably would be better at whatever hobby or, again, whatever you like to do behind the scenes, and golf being one that, a lot of individuals may be into, and again, would be a lot better at if they practice more and played more. So again, the idea that they're not necessarily a key piece of the business is probably wrong, or even if it is right, they've never tested that out. So chances are they're not quite as confident about that as maybe they like to initially relay that they are. So what we're ultimately saying is, does it make sense because of the fact that your business might not be as self-sustaining as you would like to think, Mr. or Mrs. Business Owner, to insure not only your personal liabilities, right? Again, based on your reportable taxable income after fixed expenses come out of your gross income, with an income protection plan, and then separately look at a business expense plan which covers said fixed expenses that come out pre-tax. You really want a 1-2 punch when working with business owners. Again, we can only insure the reportable income for paycheck insurance, and then we separately need this business expense plan to cover the fixed overhead expenses. This being kind of a general idea of the list, the main idea that some people kind of get thrown off a little bit is that a mortgage on a commercial property is not considered a fixed expense. Somewhat easy to assume why, because there's actually a term on it, right? But the mortgage and loan interest would be considered a fixed expense, because the assumption would be you're still going to have a lot of costs in that regard, even if the mortgage is gone. A lot of people are going to, refi, take equity loans, so on and so forth. So that's definitely somewhat of more of a fixed expense idea on the interest side. Lease and rent payments, of course, utilities, depreciation, billing and collection fees. Let's remember the professional service fees, and we're also going to include insurances. So for income protection, you would have to be, this is paycheck insurance, you would have to be a C Corp to write that policy off, right? Anyone that's any kind of business structure outside of a C Corp would not be able to write off the income protection portion of their portfolio here. But the business expense side, you can write off the business expense premiums. Most business owners do. That would, of course, create a taxable event as they utilize that policy to reimburse their fixed expenses, because that is not a cash in hand policy, mind you. It is a pool of money that you use to reimburse yourself for your fixed expenses. However, think of it as a wash, right? Because not only did you write off the premiums of the policy, but you also write off these expenses on a constant basis as well. So think of it as a wash, even though that is more of a taxable event typically than the income protection side. Also keep in mind that employee salaries are considered a fixed expense as well. The only thing to watch out for are any employees that are in the same exact position as the owner, somewhat thought of as an equal. Those are oftentimes people that we cannot replace their income, as well as folks that are in more of kind of a sales capacity, because the idea would be you would never have a salesman work for you that wouldn't at least be able to bring in enough revenue to pay themselves. Otherwise, that might be kind of a bad investment as an employee. We have some marketing materials, and we're not the only carrier out there that would have this. Just note that partnering with Jetter, you can get this kind of information via any carrier niche that you need. But what we're trying to do here is allow the clients themselves to fill out kind of what these fixed expenses are on a constant basis, essentially put in what they are obligated to in their own words versus us putting that on them. And therefore, again, we can take this monthly net income and business expense amount and really look at the ability to add some insurance and, again, cover that brick and mortar that we know is super important to the client. And, liability insurances and property and casualty and, workers' comp for employees, all these things are fantastic, but none of this is doing what we're talking about today. And, again, trying to separately cover your fixed expenses with the business expense plan to make sure that you're able to pay those without hemorrhaging the company's revenue, as well as obviously take care of the personal liabilities for the client as well. So we have some false positives, right, for the business owners. I'd still be able to pay myself if I couldn't work. Well, that may or may not be true. Again, depending on the structure of your business, you may need a formal salary continuation plan, again, set up legally and then obviously the income protection and disability insurance side to fund it. But even if you're in a scenario where you could still pay yourself and it be, fine on the IRS and federal side, does that make sense to do that? I think most small business owners, regardless of what their assumptions are a key piece to the business, and them being gone, even for a short period of time, is going to make a revenue hit of a rather extreme nature on the business, at least for a short period of time, as someone else can pick up the reins, but potentially even ongoing for quite some time. In which case, doesn't it make sense to not have to pay yourself, to be able to keep what revenue you actually still are having coming into the company, stay in the company to keep it strong, viable, and really set up for whatever your next step is, right? This income protection side as well as the business expense side are both going to work together to provide an ability for that business owner to not have to pay themselves to keep their business strong for one of three things, right? We're looking at either jump starting a succession plan, potentially even having to sell the business. But hopefully what we're doing is just keeping the business strong and keeping everything going, churning and burning for that owner to come back into a strong business. But which either one of those three kind of opportunities lie for them, depending on how severe the disabling event, these policies are really the only way that that succession plan transition is going to be smooth. That business is going to be strong for the business owner to come back into, or they're going to get full price on trying to go to market to sell that business. Because if you need to sell that business within the next month, what do you think the value is that you're going to get for it versus if you can wait a year, maybe even 2 years to sell the business? Disability insurance policies, whether it's income protection or business expense, is what it is, and we know kind of what it does, at least at 1,000-foot view. But at the end of the day, I think we need to instill the idea that this provides time. Time to make an informed decision, time to not have to make rash decisions, time to not have to take half of our business value to get out of a hole, time to be able to figure out what our next maneuver is, because we know something's going on emotionally, right? Something happened to someone, they're not able to work. So accident, injury, illness, whatever it may be, they're not able to work. The emotions we can't technically help with, but what we want to do is relieve the financial side of the stress. And arguably, the financial side even adds more to the emotional side as far as stress. So again, as much as we can ease on the financial side, technically helps on the emotional side as well. An idea that it would take something catastrophic to keep me from working. Well, again, that might be true. But what you consider catastrophic and what we as an insurance carrier would actually deem you being fully disabled and therefore being able to collect these benefits might not be the same thing. And you working, let's say, at a 25% capacity because of the fact that you have to go into work and you have to do what you do, that's hurting the business, is it not? You're not at 100%, as well as how long is it going to take you to recover because of the fact that you're working through whatever's happening to you. Again, let's relieve that necessity by making sure we have some financial protection for the business expenses as well as for the income so that we can get you recovered. We can get you back to where you were turning and burning, and again, really being a key piece to that business. And therefore, again, everything staying strong. You can pay your personal bills. The business expenses are taken care of, and we're going to get you whole and 100% a lot quicker and smoother. I could sell my business if something happened to me. Again, yes, I'm sure you could, but again, someone is going to see the writing on the wall that you're in a desperate situation should you, again, not have some of this time built in by having these insurance policies to provide that. You're going to get, shark tanked in a lot of ways, right? Unfortunately, the sharks are going to come swimming, and again, you're just not going to get full value because people are going to understand very quickly your desperate situation. And if I couldn't be hands-on, I could still manage others. Well, that may be the case again, but again, doesn't it make more sense to collect from an insurance carrier to be able to recover instead of having to come back in and, push yourself into kind of new duties that are maybe less hands-on or maybe adjusted from before? As well as the fact that just note these policies that we're talking about today, they have an ability to give you a partial payout in case you are partially disabled. So even if you can still manage people and therefore maybe just perform some of the duties of your occupation, that loss of ability to do everything you used to do is going to allow you to still get some payout. So you can do that kind of, again, adjusted or, for lack of better terms, light duty position, but you can show a loss of income because of a loss of time and therefore, again, still be able to collect. So these are fully comprehensive policies, right? 24/7 accident, injury, illness, covering fully disabled scenarios as well as partially disabled scenarios, as long as we can show a loss of income. Some opportunities for business owners as well. Keep in mind, we do have discounts, and we're not unique in this, have discounts for 3 or more people at a common employer that take out a policy. We also at Illinois Mutual, and this is specific to us, give a discount for the income protection purchase plus the business expense purchase. So that 1-2 punch of policies that we know business owners need, as long as they have 10 or less employees and business expense is viable as an insurance policy, we do give a discount when both are purchased. We have upgrades for occupation classes, which essentially just means there's a price reduction. As long as that business owner has had the business for at least 2 years, we just want that 2-year foundation to be able to see that this business is going to stay viable. Let's face it, if there's 6 or 12 months in, chances are that, unfortunately, there's a large likelihood that that business is going to fold. We can very quickly and easily find the statistics for that, and unfortunately, it's pretty large as people sometimes bite off a little bit more than they can chew. We have a business owner allowance opportunity. We're not super unique in this. A few other carriers allow this as well. But essentially what we're able to do is build in a little bit more income. So essentially bump up what a business owner actually shows after expenses and write-offs to be able to allow for a larger benefit. Just conceding the fact that we know that these business owners are making a lot more money than what they show on paper. So again, we're able to typically bump up their income about 20% or so to allow at least for a little bit more income protection or paycheck insurance. Obviously, I think there's something to be said too for the business protection and keeping value and perception high, both with your employees as well as potentially with competitors. A lot of people are in markets where, again, they're not the only business in town that does what they do, but there's a lot of connectivity between those businesses. The business owners know each other. Sometimes they'll do job sharing, so on and so forth. So I think making sure that this stuff is in place goes a long way. And again, keeping the morale of your employees, knowing that if something happened to you, you're still going to be able to keep this business running, as well as potentially with competitors and partners in the market. And I think there's going to be more external and internal motivation. If folks know that something happened to you, but you had the responsibility of putting these kind of policies in place, in which case chances are they're going to be a little bit more reticent to kind of step up and pull up their bootstraps and maybe even do stuff a little bit above and beyond what their normal duties are, because they knew that you had the foresight to put this stuff in place and again do the right thing in regards to making sure that you're responsibly running your company, both as a normal day-to-day operation as well as making sure the right insurances are in place to keep that up and running and keep your bootstraps going. Just note, we also have an ability, which is somewhat unique, to put a return of premium rider on our business expense plan along with the income protection. This is important because of the fact that, again, these policies with return of premium allow you for a benefit should you need it when you're not able to work, as well as potentially access to all your money back at retirement age. Any further information wanted on that, of course, Jetter and Co. are going to be a fantastic opportunity for you to see some numbers run. And just to give you a little bit of an idea of where we really focus in the market space, whether it be self-employed folks or W-2, we look at a lot of dental hygienists nowadays are 1099, a lot of nurses 1099, of course, your skilled laborers, carpenters, electricians, mechanics, so on and so forth, truck drivers. We do fantastic with farmers, hairstylists and barbers. These are going to be 1099 folks, and let's face it, they don't report a lot of income. But what we're utilizing here is an ability to maybe get access to the owner of that salon, as well as potentially someone that owns salons all around kind of the neighborhood or that surrounding city, because we see a lot of that going on as well. So again, business owners are a fantastic market for us. Really appreciate you guys' time today. By all means, think about business owners in the facet that this is daytime traction for you. You can go inside their brick and mortar and have these conversations. And I think there's a lot of power in the ability to do that versus waiting for people to get off work, so on and so forth. So Oscar, I'll let you take us out. But again, I really appreciate everyone's time today. And this recording will be available via link as well.
All right, thanks, Brock. I would definitely appreciate the time and sharing some of the insights on disability with business owners. And as Brock mentioned before, it's always a good idea to kind of bring up that conversation with your clients, initiate it on how disability provides a pretty good foundation for a good financial future for your clients, helps fulfill that fiduciary duty. And any questions that you may have, you can always reach out to me at di@jr.com or just give me a simple phone call, and we can take it from there. But overall, I do want to thank you for taking the time to join our session, and have a nice day. Thank you all.